All right. Good morning, everybody. I'm just taking a quick look at the gamma levels, make sure there's nothing we really need to touch upon. All right, so let's take a look at what's happening around the world. Mostly green on this screen. You can see that the red ones are the US market, and that's because of the way earnings went and the way the pre-market has opened up. So it kind of carried over from last night in a positive mood, and the markets that closed or that weren't affected by Netflix and Tesla had a reasonably decent day, but nothing really blowout, right? You can see how none of these are more than 1%, certainly nothing in the 2% area. This is a good habit to get into, right? Just kind of taking a look when you get up, what happened while you were sleeping, what's going on around the world, and is there anything that really stands out that could be a major impact in today's trading? Most of the time you're not going to find something. So don't try to hunt around and invent a problem. Some examples that I remember from the past would be when that ship got stuck in the canal and it was stuck there for days. It screwed up global shipping lines. And so that was an event that nobody saw coming, lasted a few days, and it really had an impact on trading. So, most of the time there's no really big deal, and that's fine. If you were to come in and see that we were up or that we were down, 2.5%, 3%, you would immediately want to go looking around trying to find the source, find what happened to make us move like that. We can see Japan, for an example, is down more than 1.5%. So, they had econ last night. It makes sense that they're down. It's not, drastic and extreme, but if you don't know why they're down, you would want to go look around. And a good source for that is Finance Juice. Finance Juice does a pre-market summary and an after-market summary. So when our market closes, they do a wrap up. Before a new market opens, like say the Asian Open in the evening, they do a pre-market summary. This is a really good habit to get into, especially if you can't explain or you don't know why big moves happened during your trading day. I always like understanding why our market moved. So if I see a big change in price action during our trading day and I couldn't find the source, I go looking for it, especially after hours. You won't always find it, to be fair, right? There's no guarantee that you're going to actually find what caused it, but more often than not, you will, right? And it's all about carrying the narrative, which is one of the hardest things about the summertime and taking a break and going on vacation, is that you lose the thread, right? And you have to come back and kind of rebuild the narrative. Now, one thing that Finance Juice does for us is they will provide a euro close, even though Europe isn't closed. They do it anyways because they know, a lot of traders in the US are coming in and kind of looking for some guidance on the day. But as we get closer to the open, they will do an American pre-market. So it's worth maybe circling back, right? Yellen is going to be speaking later, but she's also been chipping teeth. We can see here, she was out talking. So today we get jobless claims. When we go over to FX Street, we can see that it has the potential to be slightly impactful. and there's going to be more economic data coming out of Japan tonight. Now, this week was supposed to be kind of a sideways week, right? A breather, kind of a pause before all of next week's drama. And that's not what we've had this week, right? It is OPEX this Friday. That's options expiration week. The third Friday of the month is always options expiration week, unless it happens to be a holiday and we're closed. And next week is the FOMC decision, which is a really big deal, right? The last I checked, we were sitting at a 97%. A 97% probability that the Fed was going to hike. Now we're at a 99.8% chance that the Fed is going to hike 25 basis points, which would take us from 500 to 525, right? You're supposed to split the middle here and then split the middle here, but I don't do that. Just pick a number, right? 525 to 550, or from 500 to 525. That's the projection. And we can see that it hasn't really changed over the last 2 days, but within the last week, the market has become 100% convinced that we're going to get that rate hike. A month ago, they were still at 78%, 77%. They weren't 100% positive. And what we really want to know is, where are they pricing the pause? Well, the market's pricing a Fed pause in September with a 86% certainty, right? So if they raise us up into 550 next week, in September, they're saying we believe they're going to hold us at 550, that they won't cut, but that we won't get another raise either. So this is the one you're going to want to start watching for next, because this one is almost set in stone, right? It would take something very drastic or very extreme to change this number at that point. So it's almost not even worth looking at the July 26 anymore. Just start looking at the September numbers and watching for a change here. That would be announcing a pause, but where's the projection for a cut? In the November, they're still projecting a pause with a higher degree of certainty than a raise, and certainly no cut. For December, there's a little bit of a cut being priced in, but it's mostly still a pause. So by going through these other three, we've got a better idea of what the market is trying to price in. If you've heard that phrase before, oh yeah, it was already priced in. That used to really drive me crazy. I couldn't understand where they saw that, right? I mean, it's not hard to really figure out what it means, but how did they know to be able to say it was priced in? What the heck were they looking at? You can use that phrase for a lot of different things. I've heard it talked about with options, right? Somebody will say, oh yeah, that earnings was already priced into the options, right? I'm sure you've heard a phrase like that before. And in this case, when we talk about the Fed raising rates or calling a pause or cutting, and somebody says, yeah, well, it was already priced in. This is what they're talking about. So right now, the market has priced in a rate hike. What if they're wrong? What if they're off sides? And that's, the Fed doesn't want to do that, right? They work really hard to be transparent and to communicate. They suck at it, but they work hard at it. So it would be pretty shocking for the market to be wrong and to be caught off sides in this situation. For the Fed, who's been beating the drum, saying they're not gonna pause and they're not gonna cut, that they're gonna raise rates. That's what They've been saying it over and over and over again since the last meeting. And so that's what the market priced in. They took the Fed at their word and they priced it in. It would be damaging to the Fed's credibility for them to come out now and suddenly either pause or especially to cut. They don't want to do shock and awe to the market like that. All right, I mentioned that this week was supposed to be a kind of a sideways catch-up week. Investors Business Daily would use phrases like healing or, you know, yeah, I mean, that's what they would say is the market needs to heal, right? That it was damaged by the earlier fast sweeping moves and big gap that still hasn't been filled. But we got an expansion instead, which, I mean, it's not a bad thing. We're still not overbought in a lot of cases, and everything's fine. It's just been a little choppy. But on this weekly chart, you can still see we are a long ways away from the 10. We are definitely a long ways away from the 20 and the 50. But that beautiful fork pattern right there and the expansion with price holding above it, I mean, that is a classic textbook picture of a healthy market, right? That is trend with surge and momentum and strength and health. There's no better image that you could capture of a healthy market, right? There's certainly parabolic markets where you go out to a daily chart and it looks like Apple. But so far we're right in that sweet spot of what we would want to see. Volume is within normal ranges. The cumulative overnight volume, it's not too heavy, not too light, kind of the little Goldilocks sweet spot. We are outside of last week's range, which we just talked about, but we could see it on the intraday chart. And we are above the weekly pivot, which is way down at 4,500, right? The common rule of thumb is when we're above the weekly pivot, we're bullish and we want to look for bullish opportunities. And when we're below it, we're bearish and we want to look for bearish opportunities. But at some point, we get a little overextended and or price begins to fade back towards that weekly. And you got to kind of still argue, well, we're above the pivot. You said we should be bullish. Yeah, but I mean, if price is falling back towards the pivot and it's headed to the downside, we can make the argument that sure, we're still above the pivot, but it's obviously no longer bullish, right? So we want to look for that. I want to look for signposts and targets. So right now we've got our Globex low around 45.81. If we were to break that, then our downside targets would be the ADR half, 45.74. It would then be the previous week's high, 45.60, and then a full ADR at 45.54. Along the way, we would hit two gamma levels, these full red lines, which I'm going to have to go in and change their color to something else. These are from the spot gamma indicator. And unfortunately, you have to update the indicator every day, right? So one, it's not really mine to share. And two, it would have to be constantly updated from the website, right? Like every morning I have to go in and get it. You can see how the gamma levels 4606 and these 4580 levels kind of came into play. So we are underneath the daily pivot point, 45.95. So far, it's an MDP, missed daily pivot. We have finally made it back up and tested where we opened in the Globex. You can see that's a level that we're still trying to get through. Imagine that it's unfinished business, right? And there's still a lot of traders that are taking advantage of it. Every time we get up into that area, they're getting out of something, right? You can see the selling persists. We're not going to get through there until that's done. But that makes it pretty easy if you're using any kind of order reconstruction tools, right? Order flow reconstruction is really helpful. And then looking at the dome. Now you're not going to get free order reconstruction, right? That's something you got to pay for. Jigsaw, Bookmap. I think maybe there might be something in Sierra Charts, but don't quote me on that, right? I'm not 100% sure on that. But definitely Bookmap or Jigsaw. Thinkorswim has a Bookmap built into it. It's not the full version. It's like Bookmap Lite, and it's not free if you want to look at all markets, but they give you for free Apple and the S&P. So, you can be trading on your own broker wherever you want and still be watching a free Bookmap order flow reconstruction on the ES. Right? So, I mean, that's really something to think about, especially if you want to know how to use those tools. You don't have to pay for a subscription to it to learn how to use it. You can just use the free version. Again, you get what you pay for, and it's the light version. It doesn't have all the tools, but it does do order reconstruction. So watch the dome as we come up into those levels and see if they keep refilling it. What I mean by refilling it is if you're watching price and it's coming up into that area, see if there's a big order on the dome, like around 700, 800, 900. You want it to be bigger than the other numbers around it. And as we got up into that level and we went through it and came back out, did you see new large positions get added there, like a refill? We came up through it, we wiped it out. And as we pulled away, did they show up again? That's going to show that they're not done yet, right? And that every time we get up into that area and we take some liquidity off the board, we start to fall away and they reload. Well, then they're not done selling yet. And then we come up and we do it again, and we come up and do it again. When they're finally done selling and you don't see it get reloaded again, then it's much more likely that we're going to be able to drive through that and worry about where there might be others up here. You can also use filters on your time and sales, depending on which broker you use. Tradevate is awesome for that, right? I like to filter at least 3 different time and sales. And that way you can kind of keep track of the tape speed, right? Ten-day, 30-minute volume profile. When we're at the lows, we expect to go to the highs. When we're at the highs, we expect to go to the lows. We are building up a pretty good price shelf up here. If we break below 45.80-ish, we've got a shallow area down to 45.50. 45.50, we weren't there long enough to move the point of control. But I think if we come back down there one more time, we will have enough at that point to shift this point of control from 46.46 up to that 44.45 up to 45.52. Right? So talking about moving it up into that zone. Now, if we don't fall down by Monday afternoon or by Tuesday, all of this price down here is going to be gone anyways. So even if we don't come back down and revisit 45.50, this point of control is going to go up to that level next. We're going to lose throughout the day today a large part of this volume. And then Monday afternoon, we're going to lose the rest of that volume. I think just losing Thursdays will be enough that tomorrow, when I come in and we're doing the morning briefing, we're very likely going to find that point of control up there. All right. And we still don't have a classic shape. Mapping out the 5x5, we have a VPOC from yesterday. And we're going to keep that on the board until we pass through it. Looking at this really narrow range, it demonstrates or puts it right up into our face how narrow this zone is this morning. We are in a bit of a topping pattern, right? We had 2 days of movement coming up out of that 45.31 cog line, got into 45.80s, and now we've got this topping pattern. So it doesn't owe us a breakout and a continuation, but at some point, we're going to start to get IX10. And the one promise that the market's going to give you is we can't stay here, right? It's the only guarantee. We cannot stay here. So if you're looking for a play, a good play, I'm talking about one, make a car payment, make a mortgage payment kind of play. You've got the boundaries. So if we break this low, we're very likely going to come back down into this previous structure, 45.50. And if we break this high, well, we can just measure the entire zone and plot it up higher for our upside projections. It's not perfect. I didn't zoom in and catch it on the wicks, but it'll do, right? 46.23, 46.37, 46.50. And LRE would be trying to buy along these lows in anticipation of the idea that we're going to hold this structure and rally out. LRE stands for low risk entry. There's no signal to buy at these lows, right? We would just be buying into weakness on the assumption that we're going to bounce and go up. You will lose more frequently trading without a signal. But this isn't a game of winning and losing. We're not keeping score for the season, right? That's what we do in sports. This is about making money, losing small, and making sure our winners are bigger than our losers. So with that in mind, when you have an LRE, and then you can add anything to it that might give you a little edge for a long here, then the idea would be to take the long, take the low risk entry. Because if you are wrong and we don't bounce and we fall through that bottom, then you've got a tight stop. It takes you out of the trade. You can immediately take the other side and then trade to the downside. We've got plenty of room here. It's a 30-point move. My instincts when we're at the lows is to buy because I don't like to short from the hole. And if I'm wrong, then I've got a lot of room to make my money back and still make profit. It's not the only way to go, right? It's what I like. We are 4% above the 10-week. That's not the worst that we've ever seen, but we're getting along the edges of what we would consider a little too overbought on the weekly. Now we broke outside of the weekly expected move, came back in, broke back outside of it again, held it, came back in, and now we're back out of it again. So really want to keep track of that 45.88 and 3 ticks. You could just round it and say 45.89. Okay, so that line right there is the weekly expected move for this week anyways. So we want to keep track of that line as well. Are we above it or below it? We expect to close below that line, not just, because it was supposed to be a sideways week, but because on a week-to-week basis, at the end of the week, price closes inside the weekly expected move 70 to 80% of the time for the S&Ps. For just a one standard deviation and in a normal market, we would close inside that box 70% of the time. That's 7 out of 10 days, or 7 out of 10 weeks, excuse me. All right, we got a cute little inverse head and shoulders here on the NASDAQ. That gives us a measured move. Run it from a neckline break. 100% of the measured move would be 15,900, right? Back to the roundy, which would be this pivot point back here. And of course, from that, we would target the Globex open, and then we would target closing that gap, getting back to the 4 o'clock close. We are back above VWAP and continuing to expand past the last breakout point. That would be the neckline, right? The neckline on the inverse head and shoulders. Right, the 10-year is still holding below that 3.83 quarterly level. As long as we are range bound and we're not moving too fast on that, then we just can set that to the side. Look at the dollar. We're still underneath the quarterly level 100.93. We're inside of yesterday's range, so we're range bound. And as long as we're holding that range, we're not making fast, drastic moves, then we can just set that one aside. I will say that there was a liquidity gap here, right? We dumped down in the liquidity gap and then it needed to reset. So that's a textbook example of getting a liquidity gap and then getting it reset. But we are done with that now. And so then we got to kind of ask, well, if we were to take that off the board and just put ourselves back into this run, then we're going to expect that to be what would come next, right? Just imagine that we just unwind that move and say, well, this is what we should have had. But then we got the liquidity drop here. We got to clean that up. It's done. Are we now going to just resume this move back up? 150 cents is a level that we're going to keep track of for breakout purposes, or basically yesterday's high. But as long as we're underneath that quarterly level, everything is fine. And at that point, we just want to see the speed and the pace of the transaction, right? How fast it's moving, just like with the 10-year. So if these two stay sleepy and range bound, then we just set them to the side and we'll go look at other things throughout the trading day today. Which takes us over to US dollar Japan. Same situation. As long as we are range bound within the previous day's range and we're staying below. Oh, okay, we're above it. Let's see what we got out here. Yeah, as long as we're below 140.8, then we're fine. If we do get outside of yesterday's range to the upside, we'll focus on that weekly level. Now, the way I use my lines is if it's a weaker level that has less structure to it, I use these dashed lines rather than a solid line. So we can see that the weekly, it is thin. It's not a big, thick line like that monthly one here on the dollar. It's thin and it's dotted. So while it is a pivot level, it has less integrity, less structure. And that's why I drew it that way, right? To remind me. So I wouldn't have to go out and review the chart from the higher time frames all the time. I can just look at the way the line is drawn. $143.50 is the next level with any real structure to it. I mean, these weeklies, don't get me wrong, I drew them for a reason. They have value, but 143 is going to be a level if we get above that, right? Kind of like a swag at that point. If we stay range bound in these three today, then we'll just take them off the board, right? They won't impact the market if they are moving slowly and staying range bound, which is not a bad thing, right? We've been shook around enough in the last few days from external influence. How about a day where we don't get that kind of influence, or that the influence comes from somewhere else, say from earnings or from yelling out there chipping teeth? Yeah. Yeah, you like it. All right, what do we got this morning? Now, if you remember yesterday morning, we went through the different sectors and everything that we looked at was up a little bit. It didn't do us any good, right? The market sold off. Netflix didn't hit the projections that analysts had given. They thought it would do better by having that other pay tier. And so far, not yet. And then for Tesla, they've got, a little bit of backlog on inventory. And he's really been challenging the more legacy companies like Ford and GM. There's a little bit of a pricing war. And, he cut the prices on those cars hard to drive competitors down, which worked, but now it's kind of biting him, right? Because they didn't make as much money. So both of those are down. Netflix really isn't one that we would look at and say, oh, this is going to be a negative for the broader market, right? Netflix going down, it's not going to move the rest of us. Tesla, on the other hand, is big enough to move the broader markets, right? So Apple, Microsoft, Tesla, they do have the weight behind them to move markets. Our benchmark is 0.5%. So we want to see what is up and what is down by a half. We can see the FANG names are down 1.75%. Well, Apple and Google and Microsoft and all of those FANG names include Tesla. And then we can see that semiconductors down are more than 1.25%. So that's the downside. Basically the FANG names, right? FANG and mega cap tech. So on the other side, what's up this morning? Nat gas. We don't want a market rally on the shoulders of nat gas. So we can recognize it and we just throw that one in the trash. Bitcoin is up. KRE, which is our regional banks, and KBE. So financials are up. If we give energy a little bit more time, it looks like they'll cross the threshold and be up around 0.5%. But when we say finance, notice that the XLF is still dragging its feet. It isn't past that 0.5%. So regional banks are doing good, but broad-based finance in general is not doing really so great yet. It's not negative, but it's a broad brush when you say finance, because it's insurance, credit cards, trade desk, lending institutions. I mean, you say finance and it's just too vague. With the Bitcoin stuff up this morning, we want to go check those Bitcoin proxies, things like Riot, Mara, Coin. So we can see Riot's a little overextended, but on the weekly, it's above all of its major moving averages, right? And that's a picture of health. We've got, full groups of higher highs and higher lows. So it's in a defined trend above all of its major moving averages, and it's healthy. Put it on the daily. Okay, that looks a little overextended. You would certainly have to be nervous seeing a chart like that and wanting to participate in it. But we can measure this thing, right? And as long as it's, one, hasn't given us a half back, and then two, the 786 level. There you go. We're still holding above that. This trend is still intact. Now, what we don't want to see is a lot of basing in here, right? It needs to pull back, and then we want to see the people that left get replaced by others who are, more than willing to take their place and get right back up again. It also sets us up for a TRB, right? Trendline breakover play. Although we didn't make contact with the 10, we consider this to be a 10 MA bounce. And now we just want to see in one shot a move with a breakout that gets us all the way back to the top. That's what makes the TRB so great, right? But yesterday is not an example of what we would want to see. So if we were to back it up when it looked like that, notice that the red candle on the bottom is hollow. That's because I'm using candles called trend candles on Thinkorswim. It will make them hollow or solid based on how it opened and closed. A regular red candle closes higher than it opened, right? So it falls. A hollow red candle is because it closed higher than it opened, but it closed lower than the previous close, which makes it red. So it's red, but it's hollow. That's showing that a little bit of that recovery and the turnaround. Then we had the follow through day. If that is our follow through day, that sucked. So I'm really hoping that it wasn't the follow through day. We want to get a breakout and a clean shot all the way back up to 2065, and preferably close above that. Keep in mind that all of this price action, these last 4 days, are all inside of this one big day. And as you work through any kind of candle books or candle education, they'll focus on 50% and big structures price like this big candle. And we can use that for our projections also. So we've got our 50% mark. We've got our downside projections if we happen to break down. And we've got our upside projections if we happen to break out and continue to the upside. I really don't think we're going down, so just take those off the table. If we did go down, we would have to break through all of yesterday's pivot points, challenge this low, break the 10, and then we would target the 20. That would be 1475 to the downside. Remember, if it's strong, it continues to stay strong. We have every expectation that it will be until something fundamentally changes, right? It's almost like Newton's laws. Corey Rosenblum wrote a couple books, and he quoted Newton in those books on those trend as well, right? It's the same kind of concept. Strength begets strength, all that kind of logic. So I wouldn't mind seeing this get a little soft as we come into the open, right? Say we fade down, get a little bounce, and then a rally, but it needs to make the whole move today. If it doesn't, then the next thing I would like to see is that we stay in the lower 50% here. Maybe finish out the week down there, right? That would be a beautiful IX10 pattern. And the follow through from that would be another big expansion, another big breakout. All right, Mara also reset itself on the 10, has a TRB setup, has the big bar. It got a little weaker than Riot, right? It actually closed completely below that big bar and then managed to bring it all back in again. So now we can just focus on that reversal bar. We can see that we're above that already here in the pre-market. So we've got an inside day breakout, nice follow through so far. This is prime TRB setup right here. In one trading day, we should be able to get all the way back to the top. So from $18 to $20. Now look at coin on the intraday, just because it really lays out that topping pattern. The thing is, with a topping pattern, if we come out of it to the upside, then it was nothing more than a basing pattern. We had that big candle on the other two charts that we were discussing, but notice the difference between this one and that one. On the other two charts, they had already came back down and they either broke that low and recovered, or that low held and it started to recover. With coin, it never got below the 50%. And now it can't. If it does, it's going to be concerning. We've got the low set. We got the round number of $100 for our psychological level, and we got a defined line in the sand. We are IX10 with a lot of structure behind it. And although this is a wide IX10 compared to this very narrow one down here, look at the outcome of that. Or this narrow one here, and the outcome of that. So the ranges are getting bigger. This one was bigger than that one. This one is bigger than those other two combined. But we should still get another one of these. Just keep in mind there's no TRB setup here, right? Because we didn't fall back enough to get that turnaround. Also, this doesn't look so precarious. It looks healthier. Let's go back to Mara for a second. You know, if you see something like that, you think, oh man, that thing's already started to expand. I've missed a lot of the move. Maybe I'm too late. And you look at something like coin, and it doesn't have that same look to it, right? It's kind of what I'm referring to. Also with coin, we're not inside day breakout yet. We're still inside of yesterday's range. So that's something to, really think about. If this rejects, will the other two also fail and come back down? Trading in a peer group will do more for you than indicators like a MACD or an RSI, Bollinger Band, all that crazy stuff, right? If you're trying to trade coin, watch Mara and Riot. You're trying to trade Riot, watch Mara and coin. Watching your peer groups is often more insightful than your classic legacy indicators. Okay, so we have Bitcoin as a structure. We know Bitcoin is up this morning, and semiconductors was another one that was up or was moving this morning. Semiconductors are down. We got the pivot point from Monday, 155.25. We've got IX10. So we're inside of this 717 candle. We're still holding above the 10 and the 20. And if we were to use OCR, then we've got a really nice wedge here. In typical regular technical analysis, we wouldn't use a wedge with just 3 bars like that, right? But in OCR, it's okay. We got a little extended from the 10 here at 160.7. And since then, we've just stalled and paused, healthy, waiting for that 10 to get caught up. We've got a 10-20 cross. We've got a nice spread here between the two of them. And we've pretty much digested this really fast move. So now we just need the follow through. Looking at this weakness this morning, we could just be looking at a retest before a move higher. So let's see if they overshoot. If they overshoot, we're going to look for a gap close. A gap close would also be a 10 MA bounce, right? So we closed way down here. Let's put a price tag on that. 154.5, perfectly, right on the button. So if we break $155.85, then we will target that 154.5 gap close, which would be a 10 MA bounce and would also be a long opportunity at that point. It'd be a low risk entry because we could use the 20 for our next level for structure, right? If that gap gets filled and we continue to the downside, we'll target the next gap, which is actually 151.32, right? Because that's where we closed. And think about how bullish that was, right? We closed down there and then we rallied all the way up to that. And then closed and gapped up, and what a run, right? That was a very bullish move. I don't think it's done yet. So this pullback at this point seems to just be digestion. It's just, churning up that move a little bit. It's healthy so that it doesn't outrun the moving averages. This is setting us up for a nice long trade, but non-farm payrolls and FOMC. So I'm really not trying to take some swings, for say August expiry until we get through FOMC, and certainly I want to see those non-farm payrolls tomorrow. Take a look at NVIDIA since it's a part of the FANG names, and we know that they're down this morning, and it's also part of that chip structure, right? We were just looking at SMH. So we are inside day breakout to the downside. We've still got that really big candle to deal with from the 18th. Just marking out open, high, low, and close areas. As long as I don't get, overlapping levels. From an intraday trade perspective, you can see how that becomes useful, right? Out here on the daily, it's just really cluttered, really hard to see what's going on through all the mess. So you do the work, and then turn it off on the daily so you have it on the intraday. We are right at that inflection point in NVIDIA. So if we don't hold this as we come into the open, we're going to target that low 450.6. We're going to expect them to defend this, right? We can see these wicks down here showing they're willing to buy at that level. So as we come down into this, be really prepared for them to buy it right back up again. If you're going to short this thing, be fast, right? Don't screw around. Take your profits on that thing because I mean, you know, zooming out, it's still a beast. This is not a big picture short. AMD is also a part of the fangs now, which is crazy, right? Remember when it was $12? I do. All right, we're IX10, but it's a really big range, which does not get our attention, right? That's worthless. The 10-day moving average is 115.07, so we are still above the 10 and the 20 and the 50, but not by much, right? And we're getting a 20-50 cross, a negative 20-50 cross. So that's not good either. Let's see how it plays out today. If we do break to the downside, I would like to see a retest of that 50 moving average, which is the orange line we have there. The last time we tagged that 50, it was a nice springboard. The bounce rally failed, but we had a nice overshoot. So this is the structure. And you can see we've tried twice to make it out and keep it. We just haven't kept it. So let's see how that 50 goes. But this also, as I zoom out, is still really strong. That solid white line there is linear regression. You got a Linreg line. And we generally get reciprocation, right, of equal design. So, you know, you get 2% this way, you generally get 2% that way. If you get, you know, 2 or 3% this way, then you generally get 2 or 3% that way. Intel is another one that is broke down this morning. Inside day breakout to the downside, structure at 33.82. The 10 is at 33.42. So we shouldn't see an MA bounce. Now, when you got moving averages that are sideways like this, they're basically trash. They don't offer any real insight or value other than to be able to say that we're above them or that we're below them. The structure here is just like with AMD. The only difference is we were holding outside of it, right? So now we're back inside the box. Since we have a box, we can define the range. 32.81 is a level that absolutely needs to hold, but this has a long ways to go before we would start to consider it to be any sort of healthy, right? But it is above the 50, it is above the 200, and I mean, you know, it's above all of these. So that does imply that strength and health. It just needs to follow through. If we were to zoom out, that would be like textbook Wyckoff, right? Accumulation distribution pattern. Home construction is up now, nearly 1%. And the TNX, 1.5%. So we got bonds up this morning. Nope. Why did it say that about TNX? Still reading yesterday, I guess. No, that's pre-market this morning. Not sure. Maybe Thinkorswim's just being a little goofy. We'll watch those as they come into the open and see if they start to respond. If they do start moving like TNX's, then we're going to have, bonds up, stock down. Wow, come on, Thinkorswim. We're almost done. Want to check financials and then we'll wrap it up. So we got tech versus financials today. If mega cap tech is going to be weak, the market can stop itself from falling, kind of hold itself up a little bit, but we can't expect really much more out of it than that. So finance can carry the market, right? But it can't carry the market with a negative tech. A flat tech, yeah, sure, it can do a flat tech. If tech is flat or not really running, just kind of dragging its feet, financials can hold us up and keep us going. But if tech is down, financials aren't enough to stop the market from going down. So we really want to see, for a good short today, we really want to see these financials give it up. And right now, when we say financials, the XLF is not really what we're referring to. It's KRE, the regional banks. And none of those are looking, extraordinarily good. And maybe put in a couple of different names. I haven't updated that for a while. Biggest one on the list, WAL. And then we have NPFP. Oh man, it's been a while since I've updated these charts. Okay, yeah, it starts to make sense now when I bring this over again, it'll make a lot more sense of why KRE is up. All right, these are the top 8 by market cap weight within the KRE. One, we can see how they closed yesterday, all of them running up into the close. Think about how the S&P closed yesterday, and then, look at this. And then they've got that earnings this morning, or they had earnings yesterday, depending on which one we're looking at. And that's why this is up a little bit this morning. But these are not enough to hold the market, right? So financials are down. Regional banks are up, but they're weak little turds and they're not going to be enough. We're going to need something else to see this market rally. Bitcoin isn't going to be enough. Those Bitcoin proxies aren't going to do it. The only thing we haven't looked at yet is the China ADRs, which are also down this morning. We see KWeb is down, which means BABA, Baidu, PDD, and JD. The EV markets, Lee, XPEV, Rivian, all also down. Airlines either flat or down. So across the board with all the sectors, we're either weak or negative, and the ones that are positive are not sectors that are strong enough to carry this market, right? Bitcoin, home construction. I think energy might offer some opportunities, and the Bitcoin stuff. That'd be about as good as you can get today, right? Unless we get a market that turns around and starts the rising tide, right? The rising tide lifts all boats. Everybody, be careful, be safe, have a good day. Watch the clock and watch the news. I'll see you all tomorrow.